The Taiwanese index is lower by 0.9%.
A more cautious attitude as we move into 2023.
That's the first tick on the index. It is down about 45 odd points, so down 0.2%.
I was just thinking through what to expect from 2023, and I think it's going to be a story of normalization.
Sufficient manpower is available in Can Fin Homes who are trained.
The company has received the LOA for appointment of the company being as a project implementation agency for implementation of the harbour project of Indo-Maldives.
Month of May, I had expressed my desire to step down, basically because I wanted to do some activities to create a corpus for our trusts where we do a lot of activities.
Most of these changes actually are weight reductions and weight additions, so there are no new additions or deletions in terms of index constituents.
The market capitalization of Reliance rose at an annualized rate of 20.6% in the last 20 years, rising from 41,989 crores in March of 2002 and now standing at a whopping 17.82 lakh crores in March of 2022.
Special CBI court granted custody of Deepak Kochar, Chanda Kochar and Venu Gopal Dhut to CBI for 2 more days. That's till tomorrow.
After a 30-point gain right now, Nifty is absolutely flat with some negative bias.
Well, 2 sessions and 1 hour to go for the end of this trading year at least. You're with us here on another edition of Closing Bell with me, my colleagues Rima and Mangalam. And it's quiet, as we've been saying for 2 days now. Quiet is what we want, and it is quiet. So it's a relatively pretty quiet day out there. The Nifty is testing the 18,170 level. This is the level we put out in the morning. It's basically the trend line breakdown level from the June lows. That touch point is at 18,170. I think at the day's high, the market took that out, went a little higher, but just under it. So it's there, right there. So let's see if this gets taken out. I mean, we can't show it now visually, but it's basically if you join the June low at 15,183 and then the September low, you basically will get this trend line that we are talking about. Otherwise, 2:1 advanced decline, nothing spectacular, but nothing bad either. PSU banks are looking good. Oil and gas as a sector is doing pretty okay. And autos are not doing too badly either. So it's a neither here nor there kind of a day for the market. But I think the reason why we're saying it's good is because, I mean, last week, especially the end of last week seemed like capitulation, and the recovery so far this week, 3 days, has been pretty solid, pretty good. 18,159 on the index. Rima, hi.
Hi, year-end phenomena totally playing out, right? But the fact that after 2 days of good gains, markets are consolidating with a positive bias. Yeah. Things are, you would take that with both hands. PSU banks have been doing well. The Nifty PSU banking index is up 1.5% in the last 3 trading sessions. The Nifty PSU banking index is up close to about 10%. The other sector doing well are the auto index. So the Nifty auto index is up nearly 1%, with names like Maruti as well as M&M doing quite well. And Reliance Industries has seen a bit of a buying come through in the last 1 hour. Outside of the index, there are a lot of individual movers. Fertilizer as a pack continues to see a lot of momentum. We'll keep discussing what's happening outside of the index on the show in the last 1 hour, closing bell. But let's tell our viewers what we have for them. Nifty PSU banking index rallies in trade today. What's aiding the up move? A quick analysis coming up. A whole host of stocks are buzzing on the back of fresh news flow, and details coming up on what's aiding the up move. NSE indices will see their weighted changes effective from the 30th of December. What are the likely changes? Details lined up on the show, and we'll talk all things stock and market with Rajesh Kothari of Alf Accurate Advisors. All this and much more in the next 60 minutes.
Okay, so let's get this going with Mitesh, who is with us to run us through what he's making of the market action so far and trades that he'd want you to take. Mitesh, hi, afternoon. How are you approaching things now?
Afternoon, Prashant. I think for me, it's a very similar kind of outlook. Broadly, I think, the bounce back rally still continues. We've had a subdued session compared to what we had for the last 2 days, but the hourly charts are still suggesting that, this bounce back or this pullback has more legs. And I've been talking about range of about 18 to 20 to 50. I think that's where we are heading. So with that, I think, from an extreme short-term point of view, mild positive bias, though in case we start feeling around those 18, 200, 20 to 50 zones, then I think I'll go aggressively short. For the time being, I have a buy on Deepak Nitrate. That's a stock which is reversing on the intraday charts. So buy here with a stop loss at about 1975 for targets of 2060. And GNFC, very similar situation from oversold levels reversing in the short term. That's a buy with a stop at 538 for targets of 570.
All right, Mitesh, take your point. It's drab, dreary, but it's pretty good for the broader markets. In fact, as we speak, a bunch of stocks are doing extremely well. RCF, for instance, we've been talking about how fertilizers have come back. RCF is up 12% We've seen a big move in a couple of these rail names as well. RVNL, of course, on the back of that order win, but IRCON is joining that pack for companies. So IRCON is up around 9%. We're seeing a big move in JSW Energy as well. So for that stock, it's up around 7.5%. We were talking about IRCON and RVNL. RITES is the other one, which too has jumped about 6.5%. So yes, from a broader market standpoint, it's actually looking much better than what the advanced decline may indicate right now, because the moves are much higher on the way up as against losses. So the quantum of losses are much lower. PSU banks, that's one pack which has come back strongly after the last week's drubbing that we saw. And what exactly is aiding this rally? We have Abhishek Kothari joining in with the details. Abhishek.
Well, Mangalam, RBI gave out its report or reading on the banking sector yesterday. They say that the consolidated balance sheet of all the banks saw double-digit growth in FY22, and this double-digit growth is coming after 7 years. Even the growth in H1 FY23 that you have seen is perhaps one of the best that you are seeing in last 10 years. So PSBs have taken the lion's share of consolidated balance sheet growth that you have seen in FY22. So in terms of deposits, they accounted for 62% of the total deposits in the system as of FY22, while they accounted for 58% of the total loans in the system as of FY22. So in FY22, RBI says that PSB saw massive drop in NPS, given the fact that they were mainly led by the write-offs that they undertook. So private banks have reported more frauds in FY22 than the PSU counterparts, and private banks also drew more penal action from RBI versus PSU banks in FY22. So PSB's lending to capital market has also increased over the last 1 year. While, if you take a look at the asset quality and other parameters, YOY, the declining gross NPA amount-wise has been largely led by PSU banks for the entire banking sector. So PSU banks, the gross NPA ratio in Q2 FY23 versus Q2 FY22 has declined by 256 basis points on a year-on-year basis, while that of private banks have declined by 119 basis points on a year-on-year basis. So PSU banks gross NPA value-wise has declined by almost 16% YOY, while that of private banks has declined by 12.7% in the same period. So PSU banks core provision coverage ratio has also strengthened by almost 500 basis points YOY. So their core provision coverage ratio is 74.9% versus 74.4% that you have for private sector banks. So strong loan growth and strong coverage augurs well for the rally that you are seeing on the street. Back to you.
Thank you very much for that. Earlier today, we had a chat with LV Prabhakar, the Managing Director and the CEO at Canara Bank, and he informed us that Canfin Homes will get a new CEO before the fiscal end. Listen in.
The MD CEO will be assuming the charge maybe before this financial year, and he will be from the industry and he will be from the same financial sector. So we have no doubt about the performance of the Canfin Homes, and the attrition which we are seeing is common. Credit September, you have seen Canara Bank has grown at 20% YOY growth in credit. Now coming to the liability side. 7th October, I have increased the retail term deposit rate to 7% for general public, 7.5% for the senior citizens, when the market rate was only 6%, 5.8%. In 3 weeks, we have garnered huge amount of retail term deposits under 666 scheme, that is 660-day scheme, and also 1 year, 1.5 years, 5 years.
Right, so that was the management of Canara Bank sounding extremely positive about the prospects of the bank. They raised about 1 lakh crore in terms of deposits in just the 3 weeks of their deposit raising drive, enough for them to grow over 20% with asset quality maintained as well. But that's about the PSU pack. Dipan Mehta now joins us on the show. Dipan, good afternoon. We've been speaking about PSU banks for a bit now. I just want your thoughts on the rail theme, which has come back today. RVNL, of course, has won an order worth nearly 1,500 odd crores, but giving it company today on the way up. We have RITES, IRCON, the entire pack which is moving up. Your thoughts on the rail sector after the big rally? We saw a bit of a knock. Do you think this is a good opportunity to re-enter?
Yeah, Mangalam, good afternoon and thank you for having me on your show. I think what we are seeing is a continuation of the rally which we saw earlier in railway stocks and broadly under all PSU stocks, whether they're PSU banks, defense stocks, and even some of the other engineering companies within the PSU space. And that trend, I think, after a correction in the market, has certainly resumed. And this is like a mean reversal to mean type of a trend taking place over here. And this trading rally, I think, has got more legs, has got more strength. And certainly, I think whether it's railway stocks or PSU banks, you could expect another 25-30% appreciation in the first half of the next year itself. And mind you, these companies will report exceptionally good numbers in the December-March quarters and thereabout, considering their order book position and excessive and the spending which is taking place on the railways part. So very bullish on these companies. Of course, they're not as cheap as they were earlier, but still, I think given the stability and earning visibility, you could attribute a slightly higher price to earnings multiple. So some amount of re-rating of PE or price to book also can be anticipated for these railway companies.
Dipan, one of the stocks that you own and you were disappointed with, MapMyIndia. I know we chatted about it earlier, but MapMyIndia today has gone ahead and hit a fresh 52-week low. The stock has slipped close to about 3%, and at 1,066, it's above its issue price, which was 1,030, 1,033 thereabout, but it's still down close to about 36% year to date. So, at a time when we're not far away and we're still making good gains, MapMyIndia is at a fresh 52-week low. Any stocks which have been ranked underperformers in your portfolio this time? MapMyIndia, I'm presuming, is one of them. Any others? And which are the ones that you've lost the faith in and are saying that, oh, my stop loss has been hit now, let's exit?
Well, another company which comes to mind is Intellect Design. And clearly that showed a lot of promise earlier. We like the business model because it's a product company and getting more and more into platforms and offering software as a service. But the numbers have been disappointing past 2-3 quarters or so. The stock has steeply corrected, as you will see. And although the underlying business fundamentals are good, I think that clearly the company is not living up to its true potential. And we are a bit disappointed with the way the management is, in terms of guiding growth as well as managing the opportunities as well. I think much more can be done given the kind of quality of the products and the track record. So that's one big disappointment along with MapMyIndia. And there will be one or two more, but I seem to be having a memory lapse over here. That bad news and bad stocks over tend to forget, and that's what's happening over here.
To exit Intellect Design arena, or are you going to keep the faith?
Give them a quarter or two, because what's happening over there is that a lot of their order books, which are going to be like on the product side, the clients have moved to software as a service, so you get a lesser billing, but it's more consistent and provides a little bit more earning visibility. So let's just see, wait and watch. Typically, companies like MapMyIndia or Intellect Design or some of the other platform companies, and I'm talking about new age consumer-oriented digital platform companies, but other industry-oriented platform companies, I think you just need to give them a little bit of time, because once they get the scale going, then the operating leverages really kick in very well. And you can then expect 25-30% type of a bottom line growth to come through. But that precise inflection point is very difficult to figure out at this point of time. So I think if you have a 3 to 5 year view and a long-term investor as we are, we like to remain invested. You do keep in mind that these are one of their kind type of companies. There's no other parallel, like whether it's MapMyIndia or Intellect Design or Radiant Technologies or Root Mobile, Panda Solutions. All of these companies are like quite distinct in their space, and just need to give them a little bit of time to get the business model going and reach their full potential.
No, got that. Deepan, Adani, Wilmar, good afternoon. Any thoughts? Third day in a row, 5% circuit every day.
We don't really track the company because it's very expensive compared to its peer group companies and the type of products and business model that it operates in and the kind of margins at which it operates. So I would want to comment on that company. It's just that there are better options when it comes to consumption-oriented stocks and if you want to play that investment theme. The better way would be to play through entertainment, hospitality, travel, tourism, healthcare. I think those are stronger, longer-term secular trends, more reliable and greater visibility.
Okay, travel is, hotel stocks are doing very well. So EIH, Chalet Hotels, Lemon Tree, these stocks have seen gains of close to about 3 to 4% in today's trade. Deepan, do stay on. We need to slip into a very short break. We'll continue our conversation with you. We'll also invite Rajesh Kothari of AlfAccurate Advisors on the other side. $18,150 on the Nifty, quietly inching up as we speak. IT index has seen a steady up move since the start of trading session, but it's gained all of 0.1%, 10 basis points over there. Let's drill it down to individual stocks. These are stocks which are buzzing in trade. That's where all the action is today. Sonal Surbhi joined in from the research team, and they're standing by. And of course, Mangalam is also here. He's going to be telling us about Chalet Hotels. But let's start with India Pesticides, the stock which is surging up close to about 8%. Sonal, the news?
Well, yes, the stock is in focus today because the wholly owned subsidiary of the company has received an environmental clearance. This is for a manufacturing facility where they will be manufacturing a couple of things. First is agrochemicals and intermediates, API ingredients and intermediates, and also fine chemicals manufacturing will happen at this particular unit. They have not mentioned what kind of capacity they'll see here, but looks like this was something that the street was working with and waiting for as well, because back in 2021 the company had bought additional stake in this subsidiary. This is in the state of Uttar Pradesh, and the proposed project according to Uttar Pradesh Corporation is 250 crore rupees, and it also said that production of the plant was expected to begin in next 5 years. So looks like it'll happen earlier than what the street was working with or what was expected, and that's why this excitement for this particular unit and clearance as well. In terms of what the stock move has been, it's done well, 16% up in this week as well, and we spoke to the company just a few days back where they did mention that they will see improvement in margin in FY24 versus FY23. Exports will increase by 40% in FY23. They're expecting a growth of 30% in FY23 and 25 to 30% in FY24 as well. So they are very positive about major capex also getting commissioned in next few years as well.
All right, thanks very much for that. Sonal, I mean, the listing high was about 370, and after the bounce that we're seeing is coming to more respectable levels at about 264 now. Chalet Hotels is the next one. Mangalam, the stock's up a little bit. It's a positive note from Prabhudas.
That's correct. So usually towards the year end, we do see a lot of these hospitality companies do extremely well, and Chalet Hotels has the tailwind of a Prabhudas Leeladhar note as well. They've initiated coverage on the stock with a target price of 455, suggesting a buy. And the reason why they say that is because they believe that it is the best place to ride the industry upcycle. Everyone's been talking about the upcycle in the hospitality industry, and these guys have strategically located metro-centric portfolio. I mean, with brands like Marriott, Novotel, some Westins as well, they have pricing power too. And in terms of expansion, they have about 88 rooms that they're planning in Pune and about 168 in Hyderabad itself. So as a result of which, there could be further improvement in revenue per available room too. They see about 12% hotel addition in the next, compounding in the next couple of years from FY23 to FY25. And what that means for, their profitability is a 68% compounding. Add to that, they also have an annuity business, a bunch of real estate assets which give them rent, which Prabhudas Leeladhar believes that it could actually grow all the way at a compounding rate of 78%. And all of this means that the sum of all assets of the company and their discounting factor, etc., would mean that the fair value is 455, which is a decent upside from current levels, which explains why the stock is up. But that's about Chalet Hotels. Hariom Pipes, another recent listing, is also in focus, and this on account of some news coming in. Surbhi?
Hi, thanks for that. So Hariom Pipes is surging in trade today. In fact, since the time the company was listed on exchanges in April, it has been gaining traction. It was listed in April at a 44% premium to its issue price, and in the last 6 months, the stock has nearly doubled. Today, the company is in focus as they've entered into an asset transfer agreement with RP Metals, where they will buy companies' operating assets for 55 crores. The assets that they have acquired manufacture galvanized pipes and cold roll coil. The plant is spread across 14 acres of land in Tamil Nadu. Apart from this, a week ago, they've commissioned 15-ton electric melting furnace, which will increase their billet productions from 96,000 metric tons per annum to 104,000 metric tons per annum. The company is a Hyderabad-based backward integrated steel pipe company. They manufacture sponge iron, billets, HR strips and pipes. Almost all of their revenues comes from the southern part of India. For the first half, they've seen a revenue growth of 34%, their EBITDA grew 26%, and their PAT saw a growth of 46%.
Okay, I mean, this went completely under the radar. Hariom Pipes, I mean, Surabhi, thanks very much for that. Again, I mean, listed in April of this year, and started trading at 220, 370, nearer to 400 now. Deepan, any thoughts on any of these names? I mean, Hariom Pipes, I don't know if you track it. There is Chalet Hotels, and then there was India Pesticides, IPL is the code name, which is, do you track any of them?
No, Prashant, not that closely, but Chalet Hotels certainly is a very interesting company, and clearly I think we are seeing turnaround in the industry, and it's already put up those assets. They are strategically located, and as you know, when it comes to hotels, it's location, 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 and they really got that particular point right. Adequate capacity is there. They got some, they can get rental income opportunities as well. And with overall travel improving and the way weddings are taking place, I think even food beverage businesses should look up for Chalet Hotels. And an absolute breakout value, it is available at very, very attractive valuation. So as all hotel companies are getting re-rated, I think even Chalet Hotel can move up. It's been a big underperformer, set up capacity at the wrong time, got listed also at the wrong time. But now I think the industry is in full flourish, and those benefits should accrue to Chalet Hotels.
Right. Deepan, just before we wind this down, do you have any views on fertilizer names? Because RCF, as we speak, at the start of the show was up 12%, wasn't doing particularly badly in the first half of trade, but now it's only extending its gains. It's up on 17%, and all these fertilizer stocks are surging now. Once again, Deepak Fertilizer up 7%. Fact is the other one which is surging. Do you like any of these names?
See, I think fertilizer clearly has been a quiet performer, and last several years, I would decade or so, they haven't been able to create value. But I think positive government policies, especially in terms of subsidy management and directing the right nutrient for the farmer, I think that's playing out very well for the fertilizer industry. You hear disclose that we and our clients are interested and invested. We like Coromandel International a lot. It's got a very large footprint, India's largest fertilizer company, backwardly integrated when it comes to the key raw materials, because they are large players in DAP and single superphosphate as well. And they got a nice, very dynamic agrochemical business as well. Pretty well managed business, good corporate governance standards, and very good in terms of capital allocation as well. So when you're looking at fertilizer, and these, I think it's a great long-term story given India's agricultural strength. We'd like to go with the market leaders, but certainly there is trading opportunity in the smaller fertilizer companies as well.
But Coromandel International is your pick this year. It's given steady returns, up close to about 19%. Deepan, did you have any of these revenge travel kind of stocks in your portfolio? The ones which benefited from that?
Well, we with usual disclosure, again, we liked Indian hotels and we own some of that. And also Mahindra Holidays, that's been a bit of an underperformer and a bit of a disappointment given its potential brand and the kind of resources available of the Mahindra Group. But I think that company is also shaping up pretty well. And with greater focus on domestic travel, this company certainly has a very good potential. And they're finally looking at expanding their network of resorts. So on the whole, I think it's one company which, although it's been around for a long, long time and not created as much value, but maybe the time is right, maybe it's reached an inflection point also. And from this point on, I think it should deliver consistent earnings over the next 4 or 5 years or so.
Parts of consumption are coming back today. Pidilite has moved higher. Pidilite's moved to the high point of trade with a gain of almost 2.5% there. From specialty restaurants, again, one of those year-end unlock sort of themes, consumption themes, so to say, up around 8.5%. We've seen a big move come by on Titan as well. Titan, of course, understandably ahead of the next quarter. The next few days, we are likely to get the pre-quarter update coming in for the third quarter, which is likely to be strong for them and Kalyan Jewellers. Deepan, any of these consumption names that you like?
Yeah, I think, consumption has to be the central investment theme in every investor's portfolio. I think India is a domestic-oriented industry. And from time to time, you will have good consumption plays coming in. We are particularly positive on specialty retail companies, like Metro Brands, or for that matter, Campus Activewear, Ethos, and some of the other such companies. I think we got Landmark also a listing, which is an auto retailer. And we've seen how specialty retail companies, like Page Industries have done in the past. And given the kind of roadmap and the kind of opportunity available for these companies, we're very positive. I think they're expensive, all trading at 55, 60 times trailing 12 months. But these companies can grow at 25, 30% easily over the next 3 to 5 years. You could add even Manyavar, Vedant Fashions to that list. And that's where I think we are focusing on in terms of consumption. Again, disclosure here that we and our clients will be invested.
All right. Thanks very much, Deepan. Appreciate you joining in and good speaking with you. But look at the market in the meanwhile. Quickly, the index has given up some 60 points, 65 points in the last, 5-6 minutes or so of trade. The sharp cut which has come through, 18,108. At 251, we were at 18,163. So it's basically 60 points gone in the last 6 minutes. Very, very swift kind of fall. 60 points is not small, but I mean, it's not huge either. It's just volatile. Let's look at the bank Nifty as well. Take a look at, what the situation there is. We've seen some pullback on the Nifty bank as well, starting at about 250 or so, which was the high point from when we started at 230. Rajesh Kothari is now joining us. He's Managing Director at Alpha Accurate Advisors for some perspective on things. Rajesh, in the sort of mini turmoil that we saw, especially end of last week, did you use that opportunity to buy stocks you like? If you did, which ones in particular?
Well, I think, correction always provides good opportunities. And one thing I'm sure every investor, whether any institutional or retail, we have understood that uncertainties create opportunities. In the last 3 years, there are so many events which have happened, so many uncertainty which have happened. But in each of those uncertainty, whenever markets went down 10, 15, 20%, those are always the best of the times to do top-ups. So as a PMS, we are generally by and large, fully invested. But of course, correction further provide opportunities to keep identifying the new companies where we see the valuations are in our favor. Just to give one perspective, if you look at March 2019, pre-COVID normal year, the EPS of Nifty was roughly about, close to 480, something like that. And Nifty was trading at 11,700. From there, FY19 to FY23, the Nifty is up about, say, 56%. But earnings are up 69%. It means the valuations have corrected. And if you look at FY24, because we are already in December 2022, so we need to look at least 12 months ahead of time, then EPS is going to be up 95% versus Nifty up only 56%. It means technically you are getting Nifty at 20% discount. And discounts are always a good bargain buys if somebody has a little bit long-term view, correct? So I think markets looks interesting. There are so many opportunities which are, across various sectors. And I think it would be prudent to use it judiciously to add to equity as an asset class.
Could you talk about some of these opportunities? Rajesh, hi, Reema here, and season's greetings to you. But could you talk about that if there is a dip in the markets, if things get volatile, we see a bit of a correction, what is it that you would dip your toes into?
I think, so thanks, Rima. Season's greetings to you and your team as well. I think, banking and finance looks very solid. I think the entire asset quality issues are behind us. The issues related to credit cost is also behind us. The provision coverage ratio of most of the good banks is adequately probably ahead of time. So we are not going to see any disappointment on provision for coverage. And on the top of it, the credit growth has started improving. For the first time, in history, probably of last 12 years, for third consecutive month, we have seen double-digit non-food credit growth. And that was a number which we always wanted to have, but it never happened in last 10 years or so. So double-digit non-food credit growth is a welcome news for entire banking sector. So I think the overall banking looks very solid story, if you ask me, from current levels as well. Second story, which we talked at length, probably in last conversation, is Amrut Mahotsav of CapEx. And I think if I look at our portfolio companies, the order inflow, they've grown by 20% growth on order inflow, and that too on a 2-year, 3-year compared to pre-COVID, and that's really big number. So that is another theme which we continue to like. And auto and auto ancillary, I think we are not yet back to the peak of volumes, whether it is a CV or whether it's a PV or whether it's a two-wheeler. And on top of it, now we have export opportunities for many of the auto ancillary companies. So that space also looks interesting. So these are the few sectors, from top-down perspective, which we believe can make good money from here on.
All right. You spoke about banks, you spoke about a couple of these CapEx names, but in the past you've also liked specialty chemicals, a lot of auto ancillaries, etc. Do you think some of these themes still hold? And on auto ancillaries in particular, Rajesh, I wanted your thoughts on a couple of these stocks which are buzzing around today. It's the Rane group of stocks which are doing extremely well because of news that came yesterday that airbags will now, be required a lot more than what they are right now. Your thoughts on all these stocks and sectors?
Well, good question. So coming to your first point, specialty chemical, we have been bullish on this theme from last, 5 years. I thought not to repeat again because we will say same thing you are saying every time, So I thought not to repeat it, but we continue to remain positive. I think, what India has done on pharmaceutical, same thing probably we are going to do in specialty chemical. It's a huge opportunity. Only one thing is you need to keep remember is that focus on word specialty. Don't buy commodity chemicals. That can be really, bad wealth. We probably will not able to create wealth on that side of it. So specialty chemical on selective basis, we remain positive. On auto ancillaries, while we do not own the names what you mentioned, but we do own a company called Minda Industries, Uno Minda, and that company is also is one of the largest player in airbags. Correct. This company has done 8 times revenue and 10x profit in last 10 years. Content per vehicle is increasing every year, and the opportunity is huge. Right now, more of a domestic focus, but going ahead, even exports can be big opportunity for such names. So please put a disclaimer. We own, Minda Industries for our PMS clients. So that looks interesting. On top of it, we own few companies which are benefiting because of Europe Plus One within auto ancillary space, particularly on the agriculture equipment side, where we are seeing, many companies based in Europe. They basically would like to have sourcing from India instead of, because Europe the cost is going up. And of course, China is becoming a little bit unreliable, long-term supplier. So we are also having few companies which are benefiting significantly from Europe Plus One and China Plus One strategy in the entire auto ancillary space. So those are the few themes, which one can play through in order.
The Rane, the 3 names are Rane Holdings. If you can have these intradays up, there is, I think, Rane Brakes. 4 names actually: Holdings, Brakes, Engine, and Rane Madras. All of those names are buzzing. 4% on Holdings, 8% on Brakes. There is, I think, Rane Engines, which is up 20%, and I think Rane Madras is only on the BSE, which is up 16%. Okay, it's 431. So this is a big move that we are seeing on all these names today from the same group. Rajesh, we had the management of Canara Bank with us, and they said something interesting. We were just chatting about this. They said they hiked deposit rates to 7%, for senior citizens to about 7.5%, and in 3 weeks. My question to them actually was, do you have enough on the liability side to be able to support strong lending growth. They said in 3 weeks they were able to garner some 1 lakh crores in deposits. Are they now? It's a big bank, one of the largest PSU names, but what does it tell you about where money is actually going? These are largely savings accounts, right? I mean, so we've kind of heard rates in short-term debt funds, etc., also being 7, 7.5, even up to 8%. Any thoughts?
Well, I think, surely I think the PSU banks are also rolling up their sleeves, and we own, the bank which you mentioned, we hold in our portfolio. I think, that again, reminds the investors that, never write off the competition, So people talked about private versus PSUs for the last 8 years, but now PSU banks, when the things become a little bit tough, and when it comes to CASA as a franchisee, and fixed deposit as the moat, I think the PSU banks, particularly the large ones, whether it's SBI or kind of names, or Bank of Baroda or Canara Bank, these are the names where, they are the first one to get probably, good amount of fixed deposits, and probably the 7% interest rate is also attractive enough, particularly from, senior citizens' perspective. But at the same time, I don't see any challenge on, if your question is, since the cost of deposit is going up, whether the net interest margin will come under pressure, I don't think so. So I think probably, in fact, we believe that at least for next 1 quarter, I mean the third quarter for sure, and maybe even for the fourth quarter, the net interest margin actually would have a positive impact, because the cost is going up in a staggered manner, whereas the lending is going up on immediate basis, because they are basically on dynamic mode, right? They are getting linked. And therefore, you get a nice spread, for any good bank, whether it is public sector or private sector. So I think the story is very strong. The credit growth has started, retail side as well as corporate side, and the NIMs are going to get improved for 3Q and 4Q. And on top of it, you will see, asset quality under control, and that means less provision requirement as a bulky amount, which has eaten away good part of profit for many banks, particularly in the PSU side. So I think the earnings growth is going to be rock solid, and with a improved asset quality, and that means ROA will also move in a positive trajectory. And I think that's a good combination for any bank. With this kind of statistics, I think it's always good to own such banks. So that's basically our view on the overall banking space.
Okay, so positive on the banking space. There is no concern. Net interest margins will continue to hold for the next 2 quarters. That's been a worry in the market. Rajesh, thank you very much for joining in, and wishing you, your family, and everyone at Alpha Accurate Advisors a very happy new year. Let's slip into a very short... Thank you. Slip into a break. As always, on the other side, we'll get you a check on what dealing rooms are saying in our segment, D Street Chatter. We'll also tell you...
Well, just... a step into the red and a step into the green is what the Nifty is doing right now. The last step has been in the green. The Nifty is up by about 5 odd points, and that's largely on account of ITC. ITC has been the stock of 2022 from the Nifty pack, and currently at the high point of trade has shown a recovery of almost 1% from the lows on that counter, almost 54% higher for the stock this year. But this is the time where we get chatting about all things that are taking place in the dealing rooms, etc. Nimesh, as always. Nimesh, this time you've changed the side. Yeah. Hopefully, the mood has changed as well, or is it more of the same?
Nothing has changed, Mangalam. Frankly,
so
I think
you try to add some
struggle for another 2 days till the end of this year. We'll have to struggle for the next few days for sure. So again, day of consolidation, not much happening. We're just in a pretty small range. The good part is that there is a bit of domestic buying, and that's supporting some of the mid caps and small cap names. So again, for the day, the mid cap index is up 0.5%. So broad indices have relatively outperformed. So that's a broad feedback. In terms of sectors, again, banks are doing good today. Autos are going selectively. Autos are doing good. I guess for autos, the monthly data on first will be very important to track. So I guess a bit of buying ahead of that as well. But broadly, another day of quiet day. Flows are muted. Not much to look after in terms of news as well. I guess we'll have to bear this for the next few days for sure.
So you tried to spice it up by coming on this side, but let's...
Nothing has changed. I mean, in terms of side, it's just a matter of you sitting this side and I think that's it.
No, just pulling your leg, yeah. But let's spice it up with individual stocks. I believe you pulled out some of them right now.
Yeah, so at least I tried to get a few names. So the first stock on my list today is Pratap Foods. Again, a stock which has been consolidating of late, but I believe there a large block deal is expected very soon. Remember, if you look at the scheduling pattern, there is a large private equity who's like a promoter, and they own a large chunk. So it looks like one of the private equity investor is going to sell a large chunk, and hence that stock is in focus today. The second stock is Fusion Microfinance. Again, that stock is buzzing in trade, up 4% in today's trade and good volumes. I believe a domestic mutual fund is active buyer now. At the same time, in this particular stock, a leading FII was a big seller, and looks like that selling is likely to end very soon. So this is one stock to be in focus in the days to come. And the last stock is Gati. Again, this stock is buzzing in trade today, up 5% last when I checked. Good volumes as well. I believe there is a bit of flows back at the HNI desk. And in Gati, the feedback is that most likely the ex-promoter stake is got completely sold out in the last few days. So today, I guess some of the HNIs have bought largely in anticipation that there could be no further sale coming in from the ex-promoters of Gati, and hence that stock is buzzing in trade today.
Okay, thank you very much, Nimesh. As always, interesting list, and you managed to keep it going, even though the word we've most used the most this week has been thin trade, very quiet, low on news flow, low on trigger. But you've still managed to get us that interesting list. So thank you very much for that. Let's get to Mitesh Thakkar. He's going to tell us some BTST calls, some technical trading ideas. Mitesh, still very flat on the markets, but tomorrow is the December expiry, series expiry. So what are the trades that you would recommend, which could be unbound tomorrow?
Yeah, very, very quiet today. And as you rightly said, tomorrow is the expiry day, so important one at that. The stocks which I'm looking at are possibly, which are oversold and trying to give some kind of reversal or a bounce back. So IEX is a very tight stop at about 138.20. Can be bought for targets of around 141.5, 142 on the upside. That's on the BTSC side, which is buy today and sell tomorrow. And the other stock which I like is IRCTC, which is also a BTST. Keep a stop below 631.5 here and a target of 650 for tomorrow.
Okay, all right. Thanks very much, Mitesh, for that. There's 15 minutes, by the way, to go for close. Let's get you some more important information. Now, NSE indices, namely the Nifty 50, the Nifty Bank and the Nifty CPC index will see weight changes effective from the 30th of December. This is likely to lead to significant inflows and outflows in certain stocks. Vivek keeps a close eye on all of this. Vivek is here to tell us which are the names which could see changes and what could be the impact. Vivek.
Well, good afternoon. That's right. So all of the indices you just mentioned, the Nifty 50, Nifty Bank and CPSE index, while the changes will come into effect on December 30th, the changes or the actual buying and selling will happen during the session tomorrow. Remember, unlike the MSCI and the FTSE, where it happens generally during the last half hour of trade, these particular changes happen during the course of the trading session. So it'll be interesting to see the kind of impact. What we've done is we've highlighted the top names, where we are expecting to see at least a little over half day's volume on the back of these weight reductions and weight additions. There are no index changes or there are no index constituent additions or deletions. So first what we're looking at is we're looking at the Nifty 50, HDFC Life and Bharti Airtel are seeing weight additions. So around $9 to $18 million of inflow. Bajaj Finserv and Bajaj Auto will see some outflow on the back of these changes notified by the NSE. So $34 and $20 million of outflow expected. Nifty Bank Index, some interesting names: IndusInd Bank, AU Bank, Federal Bank, expected to see close to 20, 10 and $12 million worth of inflow tomorrow. And Axis Bank and SBI are expected to see around 80 as well as $32 million of outflow. Lastly, coming to the CPSE index, NTPC and Power Grid are expected to see inflows of close to $12 million each, while ONGC expected to see outflow of close to $21 million.
Long list. Thank you very much, Vivek, for that. Mayuresh Joshi, the head of equity research at William O'Neill, is with us on the show. Mayuresh, we've often been talking about your portfolio recommendations, your picks. I want you to start off today's conversation by telling us the top 3 triggers. What will be the driving trend which will help investors make their portfolio decision? For instance, do you think margins will expand in the auto segment? I'm just giving a random example, but do you think margins will expand in XYZ sector and therefore you're recommending a buy? Do you think that inflation is going to start hurting the spending power of people, the consumer wallet is going to start shrinking, and therefore you are going to go negative on the consumer discretionary sector? Do you think revenge travel is going to moderate? Just throwing up some examples, but tell us the top 3 triggers in your mind, 3 trends as we step into the first half of the year.
Afternoon, Reem. Afternoon, Prashant. Afternoon, Mandalam. And wishing all of you, your loved ones, the entire team at CNBC and all the viewers, season's greetings and a very happy new year as well. When it comes to the entire market context in the first place itself, we'll more or less get into a rally attempt because it's been 3 days since the intermittent bottom has been formed on the O'Neill lens, and that intermittent bottom has not been taken off. So from tomorrow, I think we'll wait a follow-through day, which is a move of 1.5% or more on the index with extremely heavy volumes, which should substantiate that the kind of bottom that has been created might be short-term in nature at this point of time. Coming to the context in terms of what might look good, specifically in the first half, at O'Neill, we've always believed the three aspects. One, earnings trajectory extremely strong. So the EPS growth in the preceding 2 to 3 quarters growing at 20-25%, and a similar note in terms of an annualized basis as well. The second element in terms of the overall perspective of the business, whether it's top line margin performance, the ROE should be reasonable enough and more than 17.5%, and it should be backed by extremely strong institutional volumes and institutional holding as well. If you combine these three factors and then put it on our sector rotation graphs that we've got on PanRay, which is our institutional software, three sectors probably emerge, Rima, at this point of time. One, capital goods stroke infrastructure. Our own belief is that a lot of initiatives that have been taken over the past few quarters, more capex is expected to come through from the government side, both as we approach the budget and the general election 4 to 5 quarters down the line. These orders are coming with better margins, and the execution track record with strict timelines put in ensure working capital constraints remain minimal on the balance sheet, which ensures healthy cash flows and healthy earnings that get reported by these capital goods stroke infrastructure companies as well. The second thing that we're probably looking at within the broader spectrum is energy as a basket. And though we are speaking about a lot of initiatives taken here as well in terms of renewables and targets set for the next 5 to 10 years from the government side, a lot of work probably being done on this part of the business segment as well. It comes to corporates as well. Energy as a space looks very, very interesting when it comes to the earnings trajectory over the next 2 quarters, to say the least. Third, I think in terms of both private capex expected to come through and what can come through as a budgetary announcement as well, utilities stroke defense players can very much remain in focus in our opinion. Order books are swelling up. Margins have been relatively better for these players as a whole. Execution has improved. And I think the cash flows which come into reported earnings remain very, very good as well. I think 3 broad parameters on what we're probably looking at over the next couple of quarters on the O'Neill.
Hi, Mayuresh. Your thoughts on Devyani International and the QSR space? Devyani International has picked up some pace currently, sitting with a gain of almost 6.5%. This week it's been up 9%, but it didn't participate earlier in the week where we saw some big moves in the likes of Westlife as well as Jubilant Foodworks. Sapphire still remains an underperformer here. Your thoughts on this space?
Afternoon, Mangalam. So very, very interesting space, I think. You follow it more closely than I do, Mangalam. But what largely goes through in terms of both the same sales stores growth, what a lot of companies within this spaces are operating in terms of their operating metrics when it comes to the next few quarters. They're adopting a very asset-light model. If you go through the transcript of most companies within the space itself, tier 2, tier 3 towns is where the maximum amount of growth is expected to come through. As discretionary spending patterns improve, and with more product offerings coming on the table, both in terms of menu offerings as well as the price points at which they're getting offered, I think the expansion that will probably go through over the next few quarters and has been going in the past few quarters as well, clearly augurs well in terms of the overall volume growth for these companies as well. When you've seen stickiness in margins over the past few quarters, margin improvement is on the anvil for these companies as well. Again, input costs largely as a variable in terms of the overall top line is expected to go down, and expectations in terms of operating leverage being on balance sheets over the next few years can be very, very evident. So yeah, I think very, very interesting space. The only hitch that we've got is it's a little bit away in terms of the pivot points that we've got of the buy ranges that we have in terms of the RS strength for most of these stocks. But yes, interesting space. If they gain price strength, we'll definitely be having a look at the spaces.
Mayuresh, you don't track any of the Rane Group companies, do you? They're all up, 5 and 20%, at least 4 of these names from the same group. Do you track any of them?
So afternoon, Prashant, track Rane Madras to a large extent. And again, I think the news of airbags, which has come through, I think the potential for this market itself is pretty large. Now, we've heard these news on numerous occasions in the past few quarters. So I think the obvious players who gain momentum, Rani Group is buzzing in today's session because of the entire perspective that they've got in terms of the brakes, the sensors, the bag materials that might be required, and the safety material itself. Other stocks as well in the larger universe as well. No direct coverage out here, but I think stocks like SRF, which probably have a large exposure in terms of the bag material, something like a Century Enka, which has got a huge exposure in terms of the nylon cord filament segment, almost 47% revenues come from that, varied applications in terms of bag materials needed for airbags. I was interested in hearing out a spokesperson from ICRA as well. The content per car is expected to go significantly higher with more automation coming through, more systems-driven approaches being adopted by OEMs as well. So yes, I think there is a lot of scope out here. We will be selective, as I said, wait for a follow-through day, and then probably have a look at either of these stocks, which are probably breaking out on reasonable volumes and where the earnings trajectory is expected to remain.
Do stay on. Need to get into a very short break. We'll come back. Last 5 minutes of the day's trading action will be coming to an end.
Yeah, Ajay, look at your dad. Will we be the same at his age?
Absolutely yes, if we plan our future like him.
How?
My father had invested in LIC's Jeevan Akshay, which gives immediate and guaranteed annuity at regular intervals, that too for life.
Wow. But do we have to wait until his age?
Absolutely not. We recently invested in LIC's new Jeevan Shanti, which gives deferred annuity, which means regular income after some years.
I see.
LIC.
LIC's annuity plans give 10 annuity options and flexibility in receiving regular income. LIC, हर पल आपके साथ.
आग को फैलने से रोकना मुश्किल है, पर नामुमकिन नहीं. अब फायरवॉल टेक्नोलॉजी के साथ सेंचुरी प्लाइड क्लब प्राइम आग से बचाए.
Being the father of 2 young daughters, and I want every daughter in this country to have same opportunities like we provide here at Network 18.
Future is hers. We are rewriting rules, reimagining equality, and redefining what power means.
So spread your wings, break the ceiling, create magic. Most importantly, be yourself.
A mega initiative to make gender parity an attainable reality. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective.
Reimagineering brighter futures with smarter steels. ArcelorMittal, Nippon Steel India. Smarter steels, brighter futures.
Okay, just 4 minutes to go for close. The fertilizer pack is all doing very, very well. I don't know if there's any news per se, but look at RCF, FACT, National Fertilizer, GSFC, Deepak Fertilizer, and so on and so forth. Deepak Fertilizer, of course, I mean, it's a mix of chemicals as well. Mayuresh, anything particular, a trigger here? They've been doing well last few days.
So I think two things. One, more subsidy expected out of the budget this time around for a lot of these fertilizer players, Prashant, and that is the buzz that is probably surrounding the sector at this point of time. So for the construct of the sector as a whole, urea is largely imported, a lot of initiatives led by the government when it comes to DAP at this point of time. And when you probably look at the farm gate prices, the hit that took place a couple of quarters back with rise in methanol, ammonia, phosphoric acid prices, I think that probably played a toll in terms of the overall margin profile as well. With input costs coming off and farm gate prices increasing at this point of time, a lot of export opportunities also expected to come through because of certain caps on Russian fertilizers as well. And the offtake that you probably got for the Rabi season as well. The acreage is probably increased significantly higher this time round, will show up in terms of numbers reported by these companies as well. So RCF probably was around the pivot at this point of time, early morning trade. This has moved significantly higher. Coromandel is one more stock where I think the entire perspective in terms of nutrient usage, clean balance sheet probably exists. So I think all these triggers might assist the momentum in fertilizer stocks going into the budget.
Okay, thank you very much for that. Appreciate you joining in, Mayuresh, and good speaking with you as always here on the program. Well, the market is 2 minutes away from closing, which means that it's a quiet close, 18 points lower, 18,114, but with enough activity in the broader markets, really. Banks, by the way, the bank index also closes down, but it does a little worse as compared to the Nifty. The high point on both these indices is interesting. On the Nifty, I mean, the Nifty, as we said, got to that trend line from June levels and then kind of sold off. The high today is 18,173, and the trend line is at 18,170. So just it breaches that by 3 points and then reverses. The low, of course, was 18,068, so not quite at the lower either. Not a bad close after 2 days of solid gains. What else? I mean, on the Nifty, Titan is something which did well. Mahindra & Mahindra stood out with gains. Power Grid and Maruti were the 1% plus gainers. Only 4 1% plus gainers on the Nifty. Losses, again, not large, but Bharti, Apollo Hospitals and Bajaj Finserv stand out with cuts of 0.5% to 1.5%. Prima.
Well, the mid-cap index ends just a smidge in the green, so it's up 15 points by the close of trade. The advanced decline ratio in favor of the gaining side, 3 in the green, 2 in the red. Fertilizer names, top of the pack, NFL, RCF, FACT, all 3 up in double digits. It's a gain of close to about 10 to 15%. Ircon International is another big mover. Hariom Pipes up 7%. They've got some news going for themselves. Ircon, as I said, is up close to about 8-odd%. RVNL, a very large order win, so the stock has gained about 5-odd%. Chalet Hotels, where Prabhudas Leeladhar is positive on the stock given their metro-centric hotels and the portfolio of brands that they own, Novotel, Marriott. Chalet Hotels, quite excited in trade, up close to about 6-odd%. On the losing side, weakness coming through on a couple of these banking names. So Union Bank, Bank of Maharashtra, UCO Bank, Indian Bank. These banks were down anywhere between 4 to 5%, and you go lower down, you would see the PSU banks sold off very sharply by the close of trade. Vertical decline seen in the last 10 minutes on IOB, Bank of India. Some of these intraday charts could also come up for you. Just a quick check on the Nifty PSU Banking Index. Yes, by the end of trade, the Nifty PSU Banking Index was down 0.3%. And when we started the show at 2:30, the Nifty PSU Banking Index was up 1.5%. So very sharp reversal seen in the Nifty PSU banking space, seeing profit booking after 2 days of hectic gains. All in all, it's a very quiet session for our markets. We end flat on the major indices, but perhaps tomorrow there could be some more action because there is that December series expiry. Thank you for watching Closing Bell. Don't go anywhere. As Mukesh Ambani completes 20 years at the helm of Reliance Industries, we'll track the landmark journey of the company over the past 2 decades on the other side.